so much for taking time out of your day to join me for another educational moment. Please remember that the information presented in these videos are not meant to be legal, professional, or tax advice. They are strictly for educational purposes. In case you missed my previous videos, my name is Sharon Grimes. I am a seasoned accountant with over 25 years experience working in various managerial accounting roles for corporations ranging in sizes from small mom and shop to international manufacturing corporations with roughly 500 employees and a little over $100 million in annual worldwide revenue. I am also an enrolled agent, which is a designation given by the IRS to individuals who have proven that they have enough tax knowledge to adequately represent someone before the IRS. This designation requires a certain amount of IRS-approved continuing education, which is how I became involved in the cannabis industry and its unique accounting and tax issues. If you're not familiar with them, I would advise watching my first video, which can be found on my YouTube channel, Sharon Grimes Accounting. If you have seen my previous videos, welcome back, and thank you so much for joining me again. It is truly an honor.
Hi, and welcome back to my fourth video in this series. This episode will be an introduction to inventory accounting, and future episodes will take a deeper dive into this, but let's learn the basics. In this video, we will be covering the different types of inventory and how the journal entries work. We will then go through a simple example of making cookies to solidify the concept and then review how that information flows through to the income statement and balance sheet. The accounting starts getting a little bit more difficult in this and future episodes. So if you are not familiar with basic accounting, I highly recommend you going back to my YouTube channel, Sharon Grimes Accounting, and reviewing at the very least video number 3. All of my videos grow on the concepts of the prior videos. So let's talk inventory. There are 3 basic types of inventory accounts: raw material, work in process, and finished goods. Raw material is basically the supplies that you purchase in order to make your products. They then flow into your work in process, which is broken into direct costs and indirect costs. Your direct costs are usually your direct labor, your raw materials, sometimes your machine hours, and so on. And then your indirect costs is your overhead, your supervisory labor, depreciation, stuff like that. This video is not going to go into those additional costs. I'm really going to focus on the raw materials flowing through to work in process and then finished goods. And then of course your finished goods is your, again, direct and indirect costs that include the same sort of stuff that's in your work in process. And then once you go through that, it ends up in your cost of goods sold once it gets sold. So let's take a look at the journal entries of this process. The purchase of your supplies creates a debit entry into your raw material inventory and a credit entry into either cash or AP, depending on how you purchase the products. So if you actually laid out cash for the product, then your credit would go to cash. But if you purchase the products on account that you'll pay at a later date, then your credit would go to an accounts payable. When you pull those products out of your raw material and begin to work with them to create your product, they then shift out of your raw material inventory and into your work in process inventory. Work in process is also sometimes shortened to be called WIP. So I may use that interchangeably. I will try not to, but if I do, I want you to know what I am talking about. And then once the product is finished, it transfers out of WIP and into finished goods inventory. And then from finished goods inventory into your cost of goods sold. So as you'll see, you've got, when you purchase it, a debit into raw material, a credit into cash or AP. And then you work in process, you have a debit into your work in process and a credit out of your raw material. And then your finished goods, again, debit your finished goods, credit your work in process inventory. So let's take an example and make one of my very most favorite cookies, pecan tassies, and see how this works. So these pecan tassies don't have a lot of ingredients. You have your cannabis flour, butter, regular flour, cream cheese, eggs, pecans, and brown sugar. If I was to buy all of these products, let's just say it comes to $248.33. The can of flour, I'm taking an estimate here. Of course, every state has a different purchase price for it. In my case, it was $230. So the journal entry would be raw material inventory, debit $248, and credit your cash or your accounts payable for $248. And here's the T accounts so that we can get a visualization. So every step is going to have this. So your raw material is debited, you have a new ending balance for your inventory, and your cash was credited. Step one of this process is to make the can of butter. In my world, it's 1 ounce of flour for 1 pound of butter. So my total raw material cost is $232.99. My yield comes to 13 ounces of can of butter. So I lose a few ounces of butter because it gets stuck to the biomass. Perhaps there's a better way of doing it, but this is not my, production is not my expertise. Accounting for it is. So the journal entry goes a debit to work in process inventory, can of butter. So remember, there's going to be various stages of your work in process. And then a credit to take it out of raw material inventory. So let's look at the T account of that. We're making the can of butter. So you can see it's coming out of raw material inventory and into work in process inventory, can of butter. Now you can see my ending inventory for raw materials is now $15.34. And my ending inventory for work in process is $232. You have your debit, your credit, and new ending balances. Step two, we make the crust for the cookie. So these cookies are like little miniature pecan pies. So there's a crust and there's a filling. My crust uses 4 ounces of the can of butter that we just made, 4 ounces of regular butter, and 3 ounces of cream cheese. When you're entering this data into your inventory system, it helps to determine what units you're going to be working with. So in this case, I'm choosing ounces. So butter in the United States is sold by the pound. It's a lot easier to work with 4 ounces rather than a 1/4 pound. So that's why I'm choosing to do it that way. Sometimes when you're working with cannabis flour, it's easier to work with grams. It all depends on what it is that you're doing. In my case, it's ounces. So I've already calculated the cost per ounce for all of these. And so the total cost of these 3 ingredients comes to $73.25. The journal entry would be work in process, cookie crust, $73.25. I'm going to credit the work in process can of butter for $71.68, as you can see over here, because that was the cost of it, of using the 4 ounces. And then I'm going to credit raw material inventory for $1.57, which would be the butter and the cream cheese. Let's look at the T accounts of this. Make the crust, $1.57. The credit to raw material, 71 credit to can of butter, and a $73.25 debit to work in process inventory cookie crust. Notice the ending inventories. Now your raw material inventory is $13.77. Your ending work in process inventory for can of butter is $161 because I didn't use all of it. So I still have some ending inventory there. And my new work in process inventory cookie crust is now $73.25. Step 3, we make the filling for the cookies. The ingredients to make the filling for the cookies is brown sugar, butter, pecans, eggs. Notice I once again break out the unit count by the ounces with the exception of eggs because it uses 1 egg. I really can't break eggs out into ounces. And I have the cost per unit and then the total cost. So my total raw materials to make this part of the cookie is $3.09. So my journal entry is a debit to work in process cookie filling, $3.09, and a credit taking it out of raw material inventory for $3 $309 for the same amount. So let's look at the T account now. Notice my raw material inventory is now down to $10.68. My work in process can of butter didn't get touched, so it still remains at $161. My cookie crust, we haven't touched that yet, so that remains the same, but now I have a new work in process inventory called cookie filling with a debit of $309. So you can see the credit and the debit. Now the final phase is to finish the cookie. We're gonna put it all together, bake it, and make our final product. So it takes the cookie crust and the cookie filling. The cookie crust costs $73 and the cookie filling is $3. Together, it's $76.34. Now, I know that this recipe yields 24 cookies, so $76.34 divided by 24 is $3.18. So my cost per cookie is now $3.18. Our journal entry for this final process is finished goods inventory gets increased, gets debited for $76.34. And the cookie crust gets credited. We reduce the cookie crust work in process for $73.25. And we reduce the cookie filling for $309. We take a look at our T accounts. And now raw material inventory didn't get touched, so it still stays at $10.68. The butter didn't get touched. But notice our work in process cookie crust is now $0. Our work in process inventory cookie filling is now $0. And now we have finished goods inventory for $76.34 with a cost of $3.18 for 24 cookies. Now let's assume we sell some of these cookies. We sell them each for $5, and let's say we made a sale of 6 cookies. The journal entry for this is going to be a little bit different. It now has two distinct entries. You have your cash for $30, $5 for each cookie, 6 cookies, and sales. Your gross sales is $30. Then you have a cost of goods sold of $19.08, which is the $3.18 times the 6 cookies, giving you $19.08. And you decrease your finished goods inventory for $19.08. Let's take a look at the T accounts on that. So you can see you have a net cash outflow of $218. Now remember, this is just because it's such a small thing. If I was actually doing production, it would be a little bit different. Your finished goods inventory for the last 18 cookies is $57.25. You have your sales of $30 and your cost of sales for $19.09. Let's see how all of this flows into your financial statements. Your income statement, you have sales, $30, less your cost of goods sold or cost of sales, they get used interchangeably, of $19.09, giving you a gross profit, and in the THC world, taxable income of $10.91. Now, there would be general and administrative expenses and selling expenses to give you a net income of whatever, hopefully $5 a cookie, or $5 for these transactions, I'm sorry. But I didn't want to go into all of that yet. That's for later episodes. Now your balance sheet. So now let's step back and assume that we purchased our ingredients on account. So we have accounts payable rather than paying cash. We received $30 in cash though. So we have cash of $30. Our inventory accounts, raw material inventory, $10.68, because remember, we didn't use all of that inventory, so we still have some left. We have work in process inventory can of butter of $161, again, because we didn't use all the can of butter that we made, so we still have an ending work in process inventory. And then we have an ending inventory for finished goods of $57.25 for those remaining 18 cookies. This gives us a total asset of $259.24. We come over to liabilities and equity. Our accounts payable is the $248.33 that we'll pay some point in the future. And then we come down to equity, our net income of the 1091, which is the $30 less than 1909. Total liabilities and equity is $259.24. Your total assets and your total liabilities and equity should always be equal. If they are not, something was recorded incorrectly. So that is your bare bones basics of inventory accounting. Next video, we're going to take this example one step further and include labor and overhead costs to this process. I'd like to say thank you for joining me again. Please feel free to leave comments and/or feedback. I can only get better if you're willing to give me your feedback. If you would like more information, please feel free to contact me by phone at 802-871-2616 or via email at info@accountingforbuds.com. Thank you and make it a great day.